Hello, in this video, we're going to look at a situation where you made a withdrawal from an ATM machine, perhaps, or you just simply transferred money from one account to another. And in these cases where there's simply a withdrawal of cash or a transfer of funds, and that includes, for example, you want to pay off the balance on your Visa card, you just simply move money from your checking account to your Visa account and that sort of thing. Those are transfers, and these are not expenses. No money has been made to purchase anything. You're just simply paying off, in an example of paying off your Visa card, you're just simply paying off the balance, and the money has already been spent, and you've already got invoices for those expenditures. So you can't record the payment of the credit card balance because that'd be recording the same expense twice, and that wouldn't work. So these situations of transfer of funds and withdrawal of funds, you want to use something called the transfer feature in the program. And let's show you some examples. For example, let's say you just simply went to the bank on the 18th of December and made a cash withdrawal. So you withdrew money from your savings account, let's say. So you use savings because we're taking money out. We're going to record that. And let's say it's a personal transaction. And we go down to the very bottom and we're going to say we're transferring money out. And let's say it's $120. And then you're done. So here you go. You've transferred money out of savings. And if that's all you're doing is just moving money out, then you are done. You've made the entry. And when you go to the report, you can see there's no impact to the income and expense statement because nothing has been spent yet. You have that money in your pocket and you may spend it at some point, but you haven't yet. And when you do spend it, then we'll record the entry. Okay. So in the meantime, you can see what happened here in the report at the bottom. It says savings, transfer of funds out of 120. And so you've got a net withdrawal of $120 so far this month. And you've got a reconciled item. So once you see your bank statement, you can reconcile this entry against your bank statement, then it's reconciled. So anyway, that's a cash withdrawal. Now let's say, for example, you want to make a payment on your credit card. So now this involves two things. You're going to transfer money into your credit card account, and you're also going to transfer money out of another account to do it. So it just takes two entries. So let's do that. So let's say we're going to transfer money into your Visa card account. So let's choose Visa and just call it a personal transaction. It has no impact on your income and revenue statement anyway, so you can just use personal. It really doesn't matter. So we're going to transfer money into your credit card account. Let's say it's $500 that you're using. You're moving that money into your Visa account, so we're transferring in, and you can see that that is done. Now we're going to also, in order to do this, finish this, now we're going to have to move money out. So on the 18th, we actually took that money from our savings account, and then again we're going to choose personal, and we're going to say we're transferring money out of the savings account of 500. And we can make a little notation, Visa balance payment or something to that effect, and then you submit. So now you can see there's two entries in this case. You've put money into your Visa account, you've taken money out of your savings account to do it, and they're both on the same day. And when we go to the report, you can see what has happened here on the Visa. There's money transferred in, and so far in savings you've had the 120 and on now the 500 that you've transferred out of this account, so it's recording both of those as the balance. So that's all there's to it. Thanks for tuning in.